Not sure if anyone is in yet. I thought I'd best go live just prior to just prior to 8 o'clock, just in case it didn't work. But what would be really useful, because we're on YouTube this time, so there's no guarantee. Sorry, I'm looking over here. Someone has replied, said they can see it. It's just about what I was out of ask. Thank you very much. Well, let's get this out of the way. We'll give it another minute or so. And yeah, we'll see. I'll probably have to go over this twice, but just to let you know, we are trialing YouTube tonight. Most of you know I've been having a problem with Zoom since August last year. Can't seem to get my face to work on the camera without the camera flickering. So it works as a steady stream when I do it on other platforms, hence why we're going to use YouTube. The only drawback really to YouTube is it doesn't allow, on a sort of a simple live stream like this, you guys to unmute yourself and to ask a question. So predominantly we're going to quite heavily rely on the chat box for any questions that you have, but also you can use the RT Avenger question Google Sheet prior to any call. Obviously that's not going to work tonight. There is one slight workaround, and it's going to be a bit of a hatchet job just tonight, but hopefully for next week's stream, if we're going to continue down the YouTube route, I'll be able to fix it. But if there is a burning question that anybody has that you need to ask, and you think it's going to be a lot easier just to say it rather than to type it in chat, get my attention in the chat box, and then you can go to Discord and just go into the voice chat, and you'll be able to speak to me directly. Now, I can't have the speakers set to hear, because there'll just be a massive feedback for anyone, so I'll have to stick my headphones on, which is why I need to get my attention. You can then ask me the question to my headset, and then I'll just have to quickly regurgitate what the question is, and then I'll try and answer it. So there is a way in which I will be able to filter that round and just get it so that it comes through the speakers and I can hear it that way, and just get the balance right and the gate right between my microphone and the speakers. But given this was done on quite short notice, I didn't have time to mess around with that, and I just wanted to get it live. So hopefully that works for you guys. There is going to be a delay, just to let you know. It's about 10 seconds or so. But let me just sort some stuff out here. Just changing the resolution quality. I mean, I don't know what the quality is like for you guys. It's saying there's an error at the moment, but I am on HD, so let's have a look. As I said, you just have to bear with me while I try and manage all of this. There's only so much you can actually really do testing it just by yourself. Okay, looks all right to everybody else? Fine. All right, guys, well, what we'll do, we will crack on. And then those that are late come in, we'll try and pick that up. Hopefully there'll be some Avengers in the chat. They can help ask with any questions you guys might have. But I will be looking at the chat box. If you see me look into the other monitor, it's just because I'm trying to read the chat and make sure I'm not losing anything. And yeah, let's see how this goes. Hopefully it works, and it might be the future of it. The other thing that I can now do is I can just sort of mess around with a few of these little buttons, so we can, sorry there, I'm on the wrong thing. Let's get OBS open. That to the live stream, and hopefully now that's what you're going to see. Okay, so just having a look at where we are at the moment. As always, we're going to go into price action in a little bit more detail later on. So Bitcoin was, continuing its other leg up over the weekend. We just got under 24,000, as you can see. I mean, it was just a smidge under 24,000. Then there's been a bit of a rejection since then. I mean, it actually dropped all the way down to about 22,500, but we're starting to see it pick back up. And to be honest, all it's done is range. It's been in this range, and this is the hourly chart. So there's a number of candles on here, but you can see from pretty much the 21st, so last 10 days, we've just been functioning in this 23,300 to around about 22,600 range. Yes, we've broken above it a couple of times, and we've broken slightly below it. And to me, that's probably kind of to be expected. We've got, I mean, we're going to talk about it a little bit later on, the FOMC meeting tomorrow. And, you know, it kind of feels like it's just a big intake of breath at the moment, waiting to see not necessarily what the rate's going to be, as I think that's pretty well known. It's going to be 25 basis points, or it's highly probable that's what it's going to be. So I think the main driver that's going to potentially move the market is actually what Chairman Powell's going to say in his conference, which again we'll go over a little bit later on. But as we've said, we've got a lot of earning reports coming out. We've also got a lot of unemployment and job opportunities data coming out tomorrow and then throughout the rest of this week. So there's definitely a lot of information that can either give the market a bullish sentiment it needs to continue its rally upwards, or potentially to spook the market and perhaps see it retesting some of the lows. I say the lows, some of the previous levels through January. Anyway, we'll cover all that a little bit later on. And we did get one prior question from Chris. I've kind of bookmarked to come back to this a little bit later on, but once I have a look at where we are in the sort of bull bear cycle, which we can certainly have a look at, I'll give you my views, and of course feel free to put your views across as well. Want to have a look at what people with a decent amount of cash could do, and whether or not that's an ideal time to start putting into cryptos, and then who has been buying all of these cryptos, all of this Bitcoin recently, which again, I found the news article on that. We can read into that as we see fit. As always, well, not always, but we're going to start with the news. There's a few articles here, so I'm not going to spend too much time on them, but it feels like we can't go a full week without having a news article on good old Sam Bankman-Fried. But this one is a bit of an interesting one. For those of you that can remember, he had, I think it's the world's largest bail bond placed upon him at $250 million. And at the time, there were two people that co-signed his bail bond, but the judge agreed that those names could be, or those identities could be kept secret. And that caused a bit of an uproar for us nosy people on crypto Twitter wanting to know who they were. But the court was petitioned yesterday, and the judge, so US District Judge Lewis Kaplan, has now confirmed and revealed that the names of the two identified people who co-signed Sam's bond can now be made public. Now, they haven't been made public yet, so I'm not aware of a timescale for that. Maybe someone else might know that, but we are now expecting to find out who those names are. Loads of people have been spouting who they might think it'd be, from his old pal Tom Brady to Gary Gensler himself, Kevin O'Leary, the Clintons. I mean, we just don't necessarily know. But the good news is we're going to find out, and we're going to find out who really backs this person if they're willing to put that much up there. So we'll keep you up to date as and when we learn a bit more about that. And then this one, again, made me laugh today when it popped up. But Alameda Research is suing, or attempting to sue, Voyager Digital in an attempt to recover a loan repayments. Now, again, I'm not going to necessarily go through the entire article, but what made me laugh here is, if you can remember, I mean, so many of them happened. So many of them happened last year, but Voyager Digital actually filed for its own bankruptcy. And this is the reason that FTX's lawyers are going after them. They're effectively saying, oh no, this is just a bit of a to and fro between FTX and Sam Bankman-Fried. When, I don't know if you remember, FTX tried to buy Voyager Digital's assets, but that didn't really go anywhere. But effectively, Alameda's research are claiming that the misconduct at Alameda Research was at least partly fueled by Voyager Digital, who enabled this Alameda Research to continue flouting its own rules, the article says here. And as a result, the lawyers see the repayments to their debts to Voyager as unfavorable, and request that money be returned to Alameda pockets. I mean, for me, I don't know how this bankruptcy is going to be settled and this is going to work, but even if they did have a case, the chance of them recovering 100% of those funds have got to be pretty slim. You know, they'll be put on a list of creditors, and whatever funds can be recovered from Voyager Digital will be distributed out as see. Again, it just feels like another grab for solicitors to just make, or lawyers over there, to just make a bit more money, waste a bit more of this $150 million has been put aside for FTX's lawsuits. And yeah, bit of a waste of time. But again, we just can't seem to get them out of the news. Moving on to the next article, and this one involves an SEC case against a crypto firm called Library. We covered this back in November when the case was originally settled. So for those of you that weren't on the call or weren't aware of this one, Library is effectively a decentralized video sharing platform. So effectively a decentralized YouTube, for want of a better term. The SEC raised a case against them that the sale of their Library token, LBC, was deemed a security and therefore in violation. And at the time, the judgment favored the SEC. And although this wasn't, enough to shock the market, there were concerns that a precedent was effectively being laid down here, and that should cases such as Ripple and any others that now get deemed to be a security, there's a precedent that's been set. Well, there was a what do they call them? An appeal. Sorry, yeah, an appeal that was had to sort of clarify some of the comments that were made within the settlement agreement. And one of the ones that was questioned was whether it was the sale of the tokens directly. So originally, when the sales happened, whether that was where it was deemed a security, or the original settlement suggested that all tokens, whether they were sold directly or within a secondary market, were deemed as a security. Well, this appeal has now been held, and the judge has actually confirmed that tokens that were sold in the secondary market do not constitute a security. So it's a bit of a partial victory for Library, and then also how this can be seen going forwards. Whether or not that will still be applicable in the Ripple case and any other case, I don't know, but there certainly seems to be a precedent that has been set regarding the secondary market. So potentially a bit of positive news there, and sort of a favourable outcome, certainly for Library and anybody that bought the LBC token in a secondary off a secondary market, should I say. So again, I think it's just something to just have in the back of your mind. And we know that, well, they keep on saying this, but we're under the belief that the Ripple case will be resolved sort of midway through this year. And it'd be interesting to see whether or not they come back to this case and cite a precedent from this to deem whichever way they decide to side on it. And again, I'm sure as we get much closer to that case being settled, we'll start talking about Ripple and that a lot more. Just checking, no, nothing in the comments yet. So this is an interesting one that's caught my eye, and well, I'll read the news article and then we'll explain why. But Bitcoin in Nigeria is apparently 60% more expensive, and for the life of me, when I see things like this, everyone starts touting about it, and you see people in crypto Twitter and YouTube videos talking about, the demand for Bitcoin is so high in Nigeria that it's 60% more expensive. And I just can't understand how that is actually the case, because, Bitcoin is borderless. Just because you live in Nigeria doesn't mean that you have to buy Nigerian Bitcoin. So I wanted to actually look into this article, and this article has a disclaimer down here underneath the picture. So it originally came out a few days ago, but it's actually been updated today to clarify this Bitcoin premium, because I think the article was slightly misleading to start off with. But we'll go into how it was misleading a little bit later on. But I just want to, right from the out, just sort of point that out. So going up to the top, the price of one Bitcoin in Nigeria is equivalent to $38,000 in the official rate for the local currency. But there's more on that. So what they're saying is, if you converted the official currency into dollars, then the price that it would cost would be $38,000. But this is where we need to sort of delve into that a little bit clearer. So the price of, so down here, so in this bit, the price of Bitcoin has skyrocketed to well above global market levels, but only if the official Naira, to US dollar rate is used for calculation. At the time of writing, the price of one BTC on the Nigerian crypto exchange, Naira X, is 17.8 million, bloody hell, I'm going to say this again, Nairas. Apologies if that's not it. Equating to a whopping almost 39,000 in the official rate. This is the big caveat though. However, local media points out that the official foreign currency rate listed by the Central Bank of Nigeria doesn't reflect the actual USD price available to Nigerian citizens. So CBN shows that $1 is equivalent to 460 I'm just going to struggle with this. Nairas yesterday. However, the exchange rate in parallel markets, or the actual price to Nigerian citizens, is much closer to, my cursor's over that, 750. So that's where the disparity comes in, and that's what's causing this premium to happen. And at the time of writing the article, Bitcoin was sitting at 23,700. So if you take the difference between 460 and 750 and then apply that across 23,700, that's where you effectively get the additional $15,000 from. Crypto Twitter explodes, saying how, it's such a bullish case for crypto and for Bitcoin, and the demand is so high that it's driving the price up. It's not. It's not at all. It's just literally someone looking at apples and oranges and calling them cucumbers. There's a simple explanation as to why that is, but it certainly made a decent headline and a few good engagements on Twitter. But I always kind of say, and I think this is certainly what I try and make the Avenger calls about, is just try not to take everything you see at face value. The smallest amount of just delving into it can really save yourselves a bit of trouble. Granted, none of us are really going to have been caught out by this one, but it's just an example there that there's a catchy headline, but actually you just scratched even the slightest bit under the surface, and it soon unravels. And hopefully that should go with whatever it is that we're trying to do within the crypto space, particularly when we're looking at research of potential tokens. Okay, last article to try and cover now, and this one is to do with Elon Musk and Twitter. So obviously Elon Musk bought Twitter last year, and he is effectively trying to turn Twitter into this one space does all kind of social media platform which does free speech. But one of the things he's really wanted to push was to have a sort of a licensed payment system within Twitter. Obviously, I'm fairly certain, I'm 99% certain until I said obviously, Elon Musk was involved right back in the beginning of PayPal. Fairly certain that's right. Hopefully someone will correct me if I'm wrong. And so he knows all about sort of, the power that sort of a peer-to-peer payment system can have. It being Elon Musk and it being Twitter, there was some heavy belief this might be Dogecoin related, and that might be the payment system that was going to be used. And if we just bring up a chart and have a look at Dogecoin, sorry, I should have had this one prepared. Let's have a look at Doge down here. So since that news kind of broke, we've had a fairly decent bump in Dogecoin. Now, caveat to that. Actually, when you read into the article, so this one's come out from the Financial Times, which granted a lot of people in crypto Twitter may not necessarily read, but this was the people that broke the story first, and then other news agencies effectively cited off this. But as we scroll down, Elon Musk he goes through just explaining how he's been going through the necessary regulatory checks and getting the licenses within the United States to be able to offer this service. And I want to find out where he actually puts it. Sorry, I did have it and then I scrolled to the top. I will find it. Okay. Yep, here we go. So this article, this paragraph down here, so this is the catch, is, as I say, everyone in crypto Twitter just assumed it was going to be Dogecoin or at least another cryptocurrency, but Musk has said he wants the system to be in fiat first and foremost, but bits built so that crypto functionality could potentially be added at a later point, two people said. Of course, you go to Cointelegraph, and the headline there is Elon Musk wants Twitter payment system built with crypto in mind. That's technically true, but he's quite clearly said that he wants it in fiat initially. But again, the headline grabs you there. And this was the article that I saw pushed out quite a lot, when actually you just go down to here, 30th Financial Times report, click on that, you get the Financial Times actual article, and it quite clearly says it within there. I still think it's a positive step forward. He is doing it with crypto in mind, and I'm sure at some stage he will look to bring in cryptocurrency payments there, whether that is Dogecoin or Twitter coin or some other, we will just have to wait and see. But yeah, anything to do with Elon crypto, it normally drives Doge up. However, well, actually, given where we're just at this pause in the market, we may see that continued rise. But Doge has been on a hell of a run compared to others today. I think it's up about 9% at one stage. Everything else is in around 1%. So any of you hold Doge, that is potentially why you've seen that climb. Okay, that's it for the news. There's another news article a little bit later on, but it's something else we got. I don't know if there's any questions coming or anything like that just yet, so anyone wants anything to put in before I move on. Okay, doesn't look like it, so I will move on then. Right, last week, apologies, I can't remember who asked, so yeah, sorry about that, but someone did ask me to do some research on a token called Fetch.ai. So that's what I've gone and done, and if you just bear with me, I've got all of the, where is it? Here we go. So, since that was the first one that was put forward, I thought, a great opportunity to have a look at that. And before we dive into what Fetch AI is, I think it's, because of mainly ChatGPT, that's certainly got a lot of the mainstream media excitement. But other things like Midjourney and is it DALL-E 2? It's loads of them out there at the moment. But, we're only a month into 2023, and it feels like AI-related services and the use of AI has sort of blown up recently. And what better time than to start having a look at some crypto/AI-related projects. And it's a shame that we're looking at the end of the month, because as you'll see, most of the ones that I've had a look at when researching this have seen a much larger pump than the rest of the altcoin markets, and it's probably riding off the back of the hype around AI at the moment. I do think, just given sort of people's reaction to ChatGPT and other AI products out there, that there is a really good potential that this could be another positive boom sector within the crypto market during the next bull run. And so actually trying to find a few projects that are based around AI may actually be a sort of a very good opportunity for us. Now, I hadn't heard of Fetch until last week. However, sort of in the research that I've done in it, it does seem to be quite a popular token. It has quite a good backing. We'll go into that now. But so what I've done is, I'll quickly flash it over on the screen, is I've done some notes on it, which I will effectively be reading from, but I'll put them on the other screen. And then I will sort of tidy these notes up and I'll dump them in Discord for anyone that's actually interested in looking into Fetch.ai. But just whilst I have it on the screen, I'm just going to read those two paragraphs there. So what is Fetch.ai? So Fetch.ai is an open source, decentralized digital world and a decentralized autonomous organization, DAO, that uses AI and blockchain technology to create an intelligent and self-organizing digital economy. It aims to provide a decentralized infrastructure for AI-based services and facilitate the creation and execution of smart contracts. The goal of Fetch AI is to enable autonomous agents to make decisions, negotiate, and transact on behalf of individuals and organizations in a secure and transparent manner. It seeks to address the challenges in existing centralized systems, such as lack of transparency, inefficiency, and high transaction costs, by providing a decentralized and autonomous platform. Which, to me initially sounds like absolutely nothing, but I didn't write that. I actually typed what is fetch.ai into chat GPT, and that is the definition that it gave us. So yeah, I was pretty impressed with that, because as my research sort of goes in, covers all of the main points. Yes, I've gone in a bit more detail, but it just goes to show you how clever chat GPT is. And you know, it was a 5-second wait time, and then just off it went and started doing that. So I could have gone into much more detail, but that was fine. I promise you, I didn't do the rest of the research on ChatGPT. As tempted as I was, and then just palming off as my own, I thought I'll try and do a little bit more. So this is the website, fetch.ai, and I'll be honest, I'm not particularly impressed with the website. Yes, it looks great. It's got some great animations within there, but actually the level of detail and information that it gives you, in my opinion, is quite lacking. And that might be down to the ambitious nature of what they're trying to deliver within fetch.ai, or they just don't want to reveal it because, you know, they're not too sure how far this thing can go. But for me, it does lack information, and so I had to sort of like read quite a lot about this, watch quite a lot of videos to really try and understand what it is that they're trying to deliver. But this is the first page. I'll go through socials later, but you effectively got a very, very brief summary of what it's supposed to do. Talking about these autonomous economic agents, which we'll go into, its blockchain and why that's important. The fact that it's machine learning, and then there's going to be dApps that effectively are built off that as well. So fine, yeah, you know, a little bit of information goes there, but then there's not too much else. So we go down, there's a stuff on FET, which is effectively the native token. We'll talk about that a little bit later on. So in terms of use, it's where you can get it from, how you can stake it. You can download a wallet, it's a native token now, and you can have a look at the block explorer. It's fine. Learn, so you can then understand what FET is, what their token is, and again, as I said, how it can be staked. So not too much information again here. The technology, so it starts to base down, and we'll go into sort of effectively what the components are of Fetch at the moment. But I just feel it's an awful lot of space. Yes, it's clean, it's clear, but for me to actually try and understand this and sort of dig through white paper bullshit to really try and understand what it is so I can read it back to you, I didn't get anything from the website, and that was for me a little disappointing. As a matter of fact, the roadmap, which we'll talk on again, there isn't one for 2023. All they are doing at the moment is explaining what they did in 2022, and because I wasn't around for this in 2022, I have no idea if ticks are the only things that they've actually achieved and arrows are still things that are ongoing. It doesn't tell me, it doesn't provide me with any dates, and there's nothing going forward. So there's nothing to effectively judge them on. Sort of validators, so how you can become a validator, or if you wanted to stake it, effectively how you can determine which validators you may want to use. But again, this is probably the most detailed section, but it's still not that detailed. You can, or you're encouraged to go into Discord and get to the validator section and have a look at there, and that's certainly what I'd recommend doing. So I wasn't particularly blown away by the website, I'll be honest. There's no mention of the team on the website. When you go into developers, it brings you to this page here. You can't even find the white paper on here. And effectively, you know, learning the concepts, it's not the concepts of fetch.ai, you know, it goes into what is peer-to-peer system, you know, really sort of basic stuff, which, yeah, granted, some of us may not know that, and that's fine, but there's no real focus even on their developer page and their developer documentation page as to explaining what it is that they effectively do. So I was hoping in basics I would get an understanding of what this autonomous, I've even forgotten what it's called now, agent was going to do, but again, it doesn't really go into that. So that's a little disappointing, but it didn't necessarily put me off, and I just wanted to just go off the bat and just say the website could certainly be improved upon. So what actually is, I'll go back onto this graphic, at least there's something moving in the background. I just need to move this across to see if anyone's asked any questions. Okay, yeah, so what does Fetch.ai actually look to achieve? What is it trying to deliver? And again, apologies if I'm looking over here, but it's just so I can read my notes and try and get your questions or comments in at the same time. So effectively, it's going to try and utilize blockchain technology alongside AI technology to create that decentralized economy, which again, doesn't necessarily mean anything to anyone right now, but we'll try and go a bit further as to get past a few of those more buzzwords. So it's going to build that decentralized network, which is going to be composed of these autonomous agents, but autonomous economic agents, because the acronym is AEA, that can basically either represent themselves, other individuals, or other services and devices. And how it was sort of linked was that it's going to create a digital twin. So whether that be a service, a person, a product, whatever, there'll be a digital representation of that, which is then effectively uploaded onto the network and can be, utilized for undertaking services, can be utilized for research. There were certainly heavy links initially with this being linked with the metaverse and everything else. So that was certainly where they were looking to go. And they were going to use a permissionless system where these agents can effectively learn on the job or evolve through AI algorithms. And so there's no restrictions or borders in which they can look to develop themselves. And it's made up of 3 key components. And there was somewhere on here that goes through the 3 key components, and I haven't got that page. Let me try and find it. It is technology, maybe. I don't think it is. Right, well, we'll just have to go with my notes instead. So there's the autonomous economic agents that we've already talked about, which we'll try and explain again a little bit more of what they are. There's this open economic framework, so there's going to be some sort of network in which there's a payment system in which services can be undertaken, and then there's these smart ledgers that can effectively record that on the blockchain as well. Now, I am not a computer scientist, so this next bit means nothing to me, but everybody that I saw or wrote about this talked about this being a very positive thing, and it does have some sort of known positives, and that's been that it uses a direct acyclic graph technology, or DAG technology, which again, that doesn't necessarily mean anything to me because I've never tried to build a blockchain technology before. But effectively, by using this technology, it enables it enables them to undertake faster transactions, and it provides better scalability than sort of traditional blockchain technology. Yeah, they were raving about this in all the reviews. I don't know how common it is that that is used or uncommon, but again, for those of you that may know a little bit more about it than me, if it's really important, maybe I'll try and delve into it a little bit more. But so in terms of their consensus protocol, though, and this is where the DAG comes in, they use proof of work, but it's not traditional proof of work that you and I may be familiar with. That traditional proof of work, which requires nodes to download every single block, and then once it wants to add a new block, it adds it to the chain sequentially, and the entire block is carried forward. So that's the traditional way that we know proof of work to work. This one uses a term called useful proof of work, where, and I need to make sure I get this right, so through that DAG system, transactions are deemed to be valid when only 2 nodes have approved it. So it doesn't take as much computational power to approve transactions, and also to keep the record of those transactions. And what it's saying there is, rather than using that computational power to verify the blockchain, it can now use the remaining spare computational power for the learning and for the AI, what the term I want to use, training or adaptability in sort of the system. So that's where they see that DAG technology being really beneficial towards them. It also means that if you didn't, with traditional sense, so Bitcoin miners, you've got these huge mining farms that have hundreds, if not thousands, of I was going to say GPUs, but they're not for Bitcoin, but mining capability, and they are, they're the ones that typically win. It's a one in a million chance that some crappy little computer is ever going to get the node. Now, I know that recently happened, so a bit tongue in cheek there, but that's once in a lifetime odds for that person to have done that. But however, by doing it this way, even if you have a particularly low processing power, you can still earn from validating transactions, because all you do is just go for the lower value transactions. And that's the whole point they're trying to say, is that it's actually a lot more funnily. There's a bit of chat going here, and let's have a look, make sure that I am not going down the wrong end of the stick. A rational biohacker agreed. I'm not fully confident in crypto utilization with AI, and if it happens, it would take decades to find a reliable and trustworthy token. Do we see alt cryptos really displaying current networks, like Theta replacing YouTube, Graph replacing Google, Filecoin replacing Dropbox, whilst having reliable tokenomics? You're also relying on the people who hodl the majority of the tokens, not dumping and killing the project after FTT, Luna Sol, OneCoin incidents. Seems like a difficult task to find a project in which greed doesn't decimate it. So, firstly, I agree with a lot of what you're saying there. In terms of, do we see the crypto market, crypto technologies displacing things like YouTube and Google and Dropbox, etc.? I do see the potential for it. So, if nothing else, the decentralized nature, that transparency, we have had, granted in crypto as well, but there are security leak concerns and hacks and a few other things that potentially put people off, particularly online, cloud storage or whatever. So I can see the potential. I too kind of question where it is, but I'll be honest, I question a lot of the tokenomics of some a lot of altcoins, and the reason is that it seems to have I'm get sidetracking here. It seems to have a token or a coin for the sake of having it. It's a native utility token, serves as a payment system within its own network. Well, it just feels like they're just doing that so that they can have a cryptocurrency. And do they actually really need it? And is there some valid ecosystem in which that token can thrive? And that's something that you should always look into when trying to research something. So I do kind of agree with what you put in there. It's Bijan is the rational biohacker. Hey there, Bijan. Right, so I'm just going to go back to where we are here. So let's talk about real world use. I actually found an example. So back in 2019, this is a UK company based out of Cambridge, and there was a real world application of this which made the news, and I couldn't get the video to play, but I did happen to watch it this one time. And effectively, it was to do with the rail network and transportations. And Fetch had deployed its AI for both the train operators and also passengers to understand not only how congested the network is, but what the impact on their particular journeys for the passengers, or for the train operators, how potential delays may occur on the track. And it was using the data from these autonomous agents or whatever. Now, obviously, the rail companies, they probably paid to have this information provided to them. In terms of the user base, well, we all do it. You jump on a train and there's an opportunity to join the Wi-Fi. You never really bother checking what the T's and C's are, but it's free. And generally anything that's free is because you're the product. And chances are, certainly in this instance, whoever signed up to that with their smartphone allowed for their data to be passed on to fetch.ai. And they were able to see, not only sort of what train they were on, but which carriage and potentially even what seat they were sat on. So they could really understand sort of how busy the trains were. And, that information could then be fed back to you or the companies to understand if they're overcrowded, if they've got spaces, how late they are, and then opportunities for them to either put on additional services or buses. And that it was held as a pretty good use case. Now, that was back in 2019, I believe. So, it should have come along a long way since then. And we'll have a look at some of the partnerships that they've had. But it actually has already been real world tested, and I'm sure they've made some significant improvements upon that. As I mentioned, it is based in the United Kingdom. Now, that's actually beneficial to us because I was like, right, well, I'll go on Company's House and I'll probably try and find a little bit of information about this. And I'm not going to bother going through it all, but I was able to see who some of the directors are, if they're still there, and sort of whatever company they're involved in. I'm not going to bother delving into that. I was able to go into their filing history. I was a bit concerned because they had a, where was it? That's where it was a compulsory strike-off order had been discontinued, but somewhere on here they had, they had these strike orders discontinued. I assume it's because they didn't file for their taxes at that time. There's no way of necessarily knowing. Oh, here it is, First Gazette, and it's a strike-off, but they put in their accounts and the next day it gets struck off. So I assume that's what it was, but I did have a quick look through these accounts, and again, I'm not going to dwell on them, but you've got the sort of the balance sheet here, intangible assets. You're going to bet your bottom dollar that's going to be the FET token at 278 million. You can see where it's increased. Now, obviously, this latest one they have is up to 2021, so maybe not that great for us to see, but it's good that this information is here and we can have a look at it. And were there any red flags that you might have, you could then go on to Company's House and just have a look at sort of these people's people in charge's previous involvement in businesses, and then just how the books are necessarily looking. So that was certainly one benefit of this company being around, one, in the UK, and two, being around since 2018. In terms of the tokenomics, which is, probably the first thing we actually check when we're looking at a token. So I went over to CoinMarketCap. So Fetch.ai is ranked 142 at the moment and currently sits at 27 cents per token. Let's have a look. It's got a market cap at the moment of 225 million, and its volume, 24-hour volume, is just under 50 million. So one of the things that I was a little unsure about, so the circulating supply on CoinMarketCap is around 25% at 820 million. So I was about to say billion there. And it says its max supply is 3.4 billion and the total supply is 1.152. So I was trying to understand what was happening there. But when I went over to, because this didn't marry up with some other research that I found on this. And so when I went on to CoinGecko, their data is a little bit different, and it's saying that the circulating supply is actually over 1 billion at the moment, but the total supply is 1.152. So it's effectively done 90% of its 90% of its total supply is currently in circulation. That's a positive thing to know because we know there's not that much more to come and dilute it any further. So it's giving a market cap of just under 300 because there's more in circulation supply, but the fully diluted based on its current valuation is 322. So always just useful to just cross-check those. It's only came as a red flag because a lot of the other people were talking about these figures and I didn't know where that 3.4 billion came from. So it does say that it's verified data on the 820. So, there's an amber flag there. We just need to try and understand where that sits. But anyway, you can use this to have a look at the communities, the white paper, the source code, etc. Speaking of the white paper, this is probably one of the hardest white papers that I've ever had to skim over. I'm not even going to lie, say that I read it. It reads more like a university research paper than a white paper. And of all the authors, there was only one person that's actually involved in the business, which was Jonathan Ward. But this, it is not a white paper that I've typically seen before. Like I say, feels very much like someone is trying to write their PhD for AI and how that can be used within the cryptocurrency world. What it doesn't detail is pre-sale and investor and founder tokens. It doesn't really have any information on the tokenomics in terms of that. Doesn't detail any lockup periods. Matter of fact, I couldn't find any specific lockup periods or necessarily the full breakdown of the lockups. I could see some rough ones, but what was quite frustrating about that was it just referred to release periods as in line with T's and C's and didn't actually detail them for the public to see. So I have no idea when these lockup periods, or if they've all reached their release date at the moment. Given where we are with the circulating supply versus the total supply, suggests that we probably have had the pre-sale investor and founder token, or certainly the majority of them, being released. But yeah, this was a difficult white paper to read, and I couldn't really focus whilst trying to read it, so I didn't. But that is their white paper. Let's have a look. Yep, gone through those. So with the team, as I mentioned, they're not on the website. The team's not announced on the website, which is quite frustrating, actually, because I want to know who the team are and I want to know what they do. So I actually reached out on their Discord and I asked that question. And it did take a while for a moderator to get back to me. And by then I'd actually already done it. But they said that to find the team, I just have to go onto LinkedIn and effectively research it there, which again is a bit naff. You can't even put the team on there. So this is another research paper that I found. So this is the team. So the CEO here is Humayun Sheikh, who's the CEO. He's still there. Toby Simpson is no longer there. He's moved on. Thomas Hahn is Chief Scientific Officer. He's still there. Jonathan Ward, Head of Research. He's no longer there, but he was one of the authors of the white paper. So I did write down Edward Fitzgerald is now the the CTO, sorry. And the Chief Product Officer, the CPO, is Kamal Ved, who I don't think I mentioned anywhere down here. Both Toby Simpson and Jonathan Ward have remained as advisors, from what I can understand, but they have left the day-to-day running of it. Now, without going through each of their LinkedIn profiles, everybody seems highly qualified for the roles in which they hold. Most of them have experience in either machine learning or specifically AI and previous cryptocurrency projects. So no particular red flags in key positions being filled by people who don't necessarily deserve to be there. So again, a positive side of things. Go back to sort of the notes. And from what I can understand, it's in the, you can find out the size of companies and it falls in the bracket of 50 to 100 personnel. So I don't know if that's small or medium size company, but it's got a few employees there. In terms of markets that can be bought on, so a fair few, if I'm being honest. But Binance, Coinbase, KuCoin, Kraken, Bitstamp, Bitfinex, Crypto.com, Gate.io, Gemini. You can find it on a few dexes, including Uniswap. So a whole range of markets, and it can also be bought in different currency pairs, whether that be stable coins, BTC, or the big altcoins as well. So that's good to see. And the reason it's so big on Binance is it actually launched as an IEO, so an initial exchange offering, back in February I want to say, when was it? Gone over. In February 2019. So it's so it's been well supported by Binance through that. From what I understand, the IEO went very well, and the community has effectively picked it up since then. It was originally launched as an ERC20 token. For any of you that are interested in this, it was a standard ERC20 token. It now has its own native token and its own native network. So if you did buy, well, you'd get the native token. Had you bought previously, they are going through the process at the moment of swapping those over. So there's a small post you have to go to. I didn't bother going through it, but if you have it, there's an actual dedicated page within their Discord, or dedicated channel thread within their Discord channel. In terms of price action, let's just go back to the overview and where it was. So if we have a look at all. So yeah, it opened at $41, and then through 2019, it kind of found its bottom in and around, well, it got down as low as sort of $1 cent during the COVID dip, and then Obviously, we started to see that climb up, and without having a look at the price, you can kind of see how through 2021 it followed the rest of the market, just naturally moving up in April and May, coming back down over the summer, and then September, October before crashing and resetting through 2022. Now, this is where the shame is, because at the turn of the year, we were back down at sort of 6 cents, 8 cents 1st of January, and we're now sitting at 28 cents. So we've already seen a significant move at the moment. And to actually regain its all-time high, it's only another 3x from where it is. So in terms of potential growth, maybe we've already missed a decent move within that. It's got a market cap of 226 million. 3x of that, we're talking about $750 million there. Could this be a $1 billion project? Absolutely. If they deliver on what they say they can deliver, which I still think is quite ambitious, and I'm not entirely sure what it is that they are fully trying to do, then maybe it is. But from looking at other AI projects out there, which are perhaps not as old, they've certainly got a much lower market cap and delivering fairly decent projects as well. Maybe they're the play that we go at. But in terms of just looking at a relatively good project, then I think this is one that you could look to invest in. I'm going to put a small amount of my portfolio within this, just sort of tidy up the bit of research that I did. From a social point of view, their Twitter accounts has about, I've lost my mouse. So it's got 115,000 followers, so it's pretty big. They do 6,300 tweets, and it's a couple of tweets a day. There seems to be a lot of likes, a lot of engagement, a lot of retweets for everything they do. So it's pretty active following within there. YouTube, they've got about 8,000 subscribers on YouTube. They do weekly updates of what they've done each week. That generally seems to be the main content that they drive out. So it's about one video a week. Discord, there's probably only about 400-ish within there. It was relatively active, but it fits and starts. As I say, it took me a few hours to get an answer from a moderator, but I have seen it moving. It's got Reddit, it's got GitHub, it's got a Telegram. One weird thing happened to me with the Telegram. As soon as I joined, Telegram rang me, or Fetch rang me via Telegram, asked me why I wanted to speak to them, which I didn't. And then I couldn't get my microphone working, so I just messaged them. And they asked me if I'd bought any tokens, which I said I hadn't. I was doing research, and then they didn't sign off on it. They just ignored me. So whether that was scammy or not, I'm not too sure. It's felt a bit weird. Never had it where I've joined the Telegram and then that Telegram group has rung me. In terms of partnerships, so they've partnered with Formula One during the 2022 season. They've partnered with West Ham United. They've got partnerships with T-Mobile, Bosch, and BMW. Through BMW, they also are part of a mobility consortium. There does seem to be a bit of a theme about transportation, but they've joined with BMW, Ford, GM Motors, Renault, IBM to form some mobility consortium. This was back in 2021, called Mobi. I didn't bother looking into what they've actually achieved from that, but Fetch were brought in to assist. And then they've also got partnerships with Volkswagen. So, they've got some pretty key partnerships out there. Which is good to see. Other related projects, I'll just put this back on the screen. So whilst I was looking at this, there were a few others that sort of sprung to mind. I've not done nearly enough research in any of this. So, but I will be, because I do think AI is a potential growth space that I certainly want to have some exposure to. Ocean Protocol, or Ocean, we've got Graph, which someone in chat's already mentioned about. Singularity Net. I put tick because it seemed to tick a few of the boxes. Viote, someone mentioned that in the call last week, so I did a tiny little bit of research on that. Biggest potential for growth, it's got quite a small market cap at the moment, but it's got an opportunity to explode up, to put there. It is backed by IBM, effectively does online AI services via smart contracts. Simon always barks on about, once crypto really takes forward and utilizing smart contracts, we can cut out middlemen. And this is exactly what they're focusing on. So using AI technology to deliver legal contracts, to broker deals, to even be a salesperson itself. So yeah, potentially great opportunity there. And then vector space AI as well. I put too late there because, again, a bit like Fetch, its market cap has significantly increased over the last 4 weeks, and so to get to all-time high it may not. If it only gets to all-time high, it's not that big a uplift. So final thoughts, big focus on AI presently, and I think it could be the boom sector for the next cycle. So I've already said that. It is an ambitious project, Fetch AI, which I'm still a bit confused about what it is it's trying to do. But the majority of the systems, I didn't mention, it does have an ecosystem. So I should go back. So this is one positive thing, I suppose. Where do I find where it's ecosystem? So they are building other dApps off this, which is good. That's what you want to see. And that's going to provide some further use case for the VET token, because it will be used as the payment system for these dApps, rather than just holding as many as you can so you can become a validator, which effectively feels like that's all it's doing at the moment. So there's CoLearn, which is a collective learning system. You can go into the website and have a look at them. Axiom, Atomics, Mobilix. I don't know if this is to do with the mobility thing. I'm probably stretching there just because previous acronym was Mobi. But anyway, Katana X, Resonate, Starfleet. There's a Dexter. Oh yeah, this is it. Is a decentralized exchange. So they've certainly got some projects in the pipeline, but they are still in development. So they need to be utilizing this time in the bear market to actually bring those to fruition. So whenever we do get out of it, some of these are ready to go, and that use case is there for people to take advantage of during the next push. A solid team, which has been around for a year. It's missing a couple of its members. We mentioned that. Good presence on social medias, daily volume across the exchanges, 50 million. It's not bad for 24-hour volume. And then, I just put the other returns there. That's my one concern. Bit of a naff website. Lacking information in the white paper. So I really want to understand about token unlocks, but given if the CoinGecko information is correct, it feels like a lot of the lockup tokens have probably been released, so that we've probably experienced. But if this tokenomics is to be believed, and we've actually got 3.4 billion, then we've still got a 75% still to be released. That could be a worry. So I want to find that out. So that's it on Fetch. Sorry if it was a bit rambly towards the end. I'll try and get those a bit more succinct. But if anyone's got another token that they're interested in, just either let me know today or drop it in Discord. Right. I'll put all of these documents and page links in Discord so people can have a look at their own leisure. Okay. Just this was a top 5 AI to buy in 2023. I didn't bother going through it, but Graph's on there, Ocean's on there, Fetch's on there, Singularity Net's on there. So there's a few ones that I'd seen a lot of people talking about. So potential. Okay, I want to talk now, after I've had a quick drink, about FOMC. And where we are with that. That's the title of this stream, I suppose, is, what is Powell's endgame? Where are we on this endgame? And how is tomorrow or the rest of this week going to play out towards that? So most of you must be aware that FOMC statement and the federal fund rate are being released tomorrow, 7 p.m. UK time. The FOMC is actually meeting today. So they meet for 2 days. That's today and tomorrow. And then it culminates in the announcement. For those of you that aren't aware what the FOMC, I'll quickly bring this up, but it stands for the Federal Open Market Committee. It's made up of 12 members, and they meet 8 times a year. So not every month, just 8 times a year, to discuss US monetary policy over the near term, the short term. And effectively, they are looking at the health of the economy, where inflation sits, and how that needs to be addressed, whether they are going to use quantitative easing or quantitative tightening measures to sort of bring the national economy to a healthy position. And there's sort of two foods of thought for that. There is increasing the interest rates. So that would obviously, we're going through that process at the moment in an attempt to stifle and then reduce inflation. And they're trying to bring that down to a target of about 2%. Well, they've said actually 2%. So we'll see whether or not it ends up being there. So that's a quantitative tightening measure. Or they could do the opposite of that, and they could just start printing money, put that out into the economy to effectively use quantitative easing to, stimulate. What's the word I'm looking for? Stimulate growth within the economy. So again, very quickly, people may talk about Powell or Chairman Powell. So the chairman is Jerome Powell. It says here it's his second 4-year. It's part of his second 4-year term, and he originally started it in 2018. There's 12 districts that cover it, and they effectively alternate between the districts. You can have a look at that as you see fit. So I mentioned there's only 8 meetings a year, and you kind of need to understand, well, you don't need to understand, but if you're interested in the FOMC, just where they fall, because inflation data gets reported every month, but FOMC is in theory every 8 weeks. So the federal rate only gets corrected 8 times a year. So sometimes inflation, we might just have to sit on news, whether that be good or bad, until the next meeting. But we can see here there's one in January and February, which is today and tomorrow. The next one's actually not until the end of March. So, it's about 7 weeks away. Then we've got one, it's about 5 weeks after that in May, and then they kind of fall June, July on top of each other. Take August off, everyone's on summer holidays, into September. Then we've got November, and then one in just to round out the year. So that's generally the dates. Obviously, the actual dates themselves slip depending on days of the year, and I believe they typically use the midweek Wednesday as the announcement date. So there we go. Now you'll have heard people talking about basis points or percentage increase, particularly in line with tomorrow's, and most people are suggesting that it's going to be a 0.25% or 25 basis point increase on the current levels. And actually, there's a little website which tracks this. This is quite interesting, so to make sure I've got the dates correct. So, why is it scrolled that way? Let me just refresh this. Bear with me. Okay. Here we go. So, the current target rate is 425 to 450. So that's currently where we sit. 98.9% of believe that there will be a 25 basis points increase, which is effectively what this huge bar is here. 1.1% believe there'll be no increase at all. What I find amazing about these probabilities is nobody seems to be allowing for a 50% increase, which, generally these are not often wrong. So, we've got no reason to suggest that it's not going to be any higher. But right now, the market is very strongly suggesting that we are looking at a 25 basis point increase. And you would then argue that that has been priced in for at the market. So this recent sort of rallying up, was particularly with stocks and with, let's get the chart up now, we've had a look at that, shall we? So it's just oh, this up's on the daily, is it? Yep, there we go. So 25 basis points has effectively been spoken about since the December FOMC meeting. The market's kind of seen that, and they've seen that there's a positive side within that. The reason they find that positive, in my opinion, is Chairman Powell, sorry, I've got cramp in my leg. Chairman Powell, at the last meeting and the last couple of meetings, but notably the last meeting, kind of suggested that, the inflation data, yes, it is coming down, and we'll have a look at that in a moment. It's definitely coming down. There's no arguing with that, but it's a lagging indicator, and it does take time. And so he's still hawkish, and by hawkish, I mean he has a more negative spin and negative sentiment on the outlook. So he's still hawkish. But what he's suggesting is that the FOMC are not afraid of just slowing down and tapering the level of increases just to allow the inflation data to catch up. And they want to make sure that what they've done in the past is actually working. And to do that, they need to allow, a couple of iterations for it to come through. What he had said then was he does see that they will probably continue to increase anywhere from 50 to 75 basis points before this is done. So we're kind of talking around about 500 to 525 level, or 5% to 5.25% level. And they probably do that in increments, which is why people are very strongly of the opinion that it's just going to be 25% here. Probably raise it 25% here, 25%, 25%, 3 increase of 25%. Now, the last increase was 50%. So again, the market see it positively that we are reducing the steps each time, and hence the market has driven up. And you'll see a lot of people are saying that 25% has been priced in, baked in, the term a lot of people use. So I foresee when FOMC is released at 7 p.m, if it is 25%, that the market will either see that as positive and they'll go on, or there'll be no reaction at all. I'm probably suggesting there will probably be no reaction at all. And what most people are really interested in is the press conference that's held 30 minutes later. So it's at 7:30 p.m. It is interesting to watch. And what they're wanting to understand is the wording and the language that Chairman Powell will use, not only in his statement, which the statement is actually released at 7 o'clock. So, you can just download that and read that and interpret that yourself. But in particular, how he answers the questions from the journalists present in the room, because they will try and, obviously, the journalists try and dig out whatever they can within the information. And how he answers those is then how the market will interpret it. So, if he goes out and says, yes, we've increased it by 25 base points, but we now see that we're going to have to hold this for a significant amount of time, the market then might suddenly realize, you know what, guys, it's still gone up. We're still at 4.5 to 4.75% already, and likely to go up to 5%. And then we're going to hold that for several months or for the remainder of the year. And suddenly the penny might drop, or he might actually suggest, from a more dovish point of view, a more positive spin on things, that factors are really working within our favor, and we see more of a soft landing than the word recession, and that will spark a fairly decent rise, I would assume, within the market. Now, going back to the Forex calendar, there's actually a lot of other things that are going to get announced this week, in which it's going to be the real telltale sign for whether or not we are curbing inflation and whether or not the monetary policy is in place. And two of them happen tomorrow, and then one of them happens on Friday. Now, the one that I'm initially interested in, because this is done before the federal rate announcement, and that's the ADP non-farm employment change. And that is we can open it up here. So that's an estimated change of the number of employed people during the previous month, not including the farming industry or government, so non-farm. Now, this is just an estimate, and this data is provided a couple of days before the actual non-farm, which is released the first Friday of every month. So this will give an indication as to how the measures have been doing. Now, recently, employment has actually been going up, and it's been higher than forecast. Yeah, it's been, trending down, but higher than forecast. So higher than forecast is good for currency, but the markets haven't necessarily priced it that way. But that's how it should work. So there's more jobs sort of getting filled. And then what also we have tomorrow is JOLTS, the job openings. That's the amount of available jobs within the period. And again, you can kind of see last time it was 10.46. They're forecasting it to be 10.28 million. But if it's higher than that, what that's saying is the economy is still expanding. We've still got job opportunities to be filled. Now, we have had a lot of layoffs in the tech industry over the last month, so maybe that might start getting reflected within these job openings. We're just going to have to wait and see. But these two things that happen on Wednesday, I'm sure Chairman Powell probably already has this information, but they are available prior to the funding rate, and could influence, if not the funding rate, but how that press conference and the narrative that's going to be used within that press conference. And then we scroll down to Friday, we've actually got the non-farm employment change. It's, that's the big one. It's the actual official numbers. And we get those monthly, same with inflation, and we can really see, have we started to see a reduction in employment? Has unemployment increased? Now, they are forecasting that unemployment will increase. If we just zoom this in so we can see it a little bit clearer. But what we've had, the last couple of times, is it's either met the forecast or it's been greater than the forecast. So, again, what Chairman Powell would like to see to show that his strategy and his plan is working is the employment rate is going up. That's bad to say, but inflation coming back down, employment rate going up, it shows that we are actually managing and controlling the inflation. I just want to go to inflation, trade and economic chart, and you can see where we were. So we'll overlay the interest rate in a moment, but inflation peaked at 9.1% back in June, and let's not kid ourselves. Since then, it has been dropping, and we've been repeatedly dropping. But we have got to aim for 2%. It has taken us 7 months to just lose 2.6%. We've got another 4.5% to go. Is that another year of this light type of level of interest rate? The word that a lot of people will be looking for is pivot. When will we see the pivot? When will we see the interest rates start to drop? And I'd suggest, just given on the data we've got at the moment, yes, it's good that it's coming down, but we're not near that 2% yet. And he has been very clear that he is happy to go through the pain until he gets to the 2%, because it's easier to turn the tap on than it is to go the other way and be too lenient and then still have a problem. So, we've got to continue to think about that. And if we have a look at the interest rate, we can actually compare them. And if we just select the United States, pick the indicator for inflation rate, and we just overlay those. So we've got the interest rates, the blue line. I'll zoom in a bit. You can see it a little bit better. So we've got the interest rate as the blue line. So you can kind of see at the beginning of the year, I think actually in February it was 0.25%. I think March was the first uplift to 0.5%. And then we see, and it wasn't that it didn't uplift here. It's just, remember, it's only 8 times a year. So it didn't meet there. So then it lifted to 1%, then it lifted, and it's actually increased on the previous 7 FOMCs. It's kind of unprecedented. The last 7 meetings have all seen inflation increase. So its current level at the moment between 4.25 and 4.5. And we are expecting, as I said, anywhere from 5 to 5.25 before this stops. But we can kind of see that, let's do it on the 5-year. Just shows it a bit steeper, I suppose. To start off with, it wasn't enough. Inflation was still going up, and then we got to that sort of tipping point, actually, around about 2.5%, where we start to see this come back down, and we are starting to see it under control. But remember, we want to get to 2. I want to get down to 2. We've still got a hell of a way to go there. So I'm not, in my opinion, particularly expecting him to say anything too positive tomorrow. I think he may well stick to his only a couple more rises, and we'll spread those out. And but I do see us now then having to hold that rate. One thing I didn't mention, just going back to the calendar here, is on Thursday we've also got the UK making their announcement. I don't have the euro on here, but the euro also makes their announcement as well, so they're going to follow. We'll have to see effectively what they do, but you can be sure that they're going to sort of kind of move in line with what the United States do. So yeah. In terms of just going back to sort of the whole point of it, the title of it, I suppose, is what is his end game? His end game is that 2%, and we are not at mission accomplished just yet. Whilst we may be getting towards the end of the interest rate climbs, we have had 7, almost 8. We'll see what happens tomorrow. Increases in a row, unprecedented, and yet the market still climbing. We're still seeing risk on people willing to put money into the stocks, and Chairman Powell, he must be looking at that, just thinking, wait a second here, what can I do to curb this? And I don't know, maybe he might shock us tomorrow and just hit us with a 50. And then have a break, and then 25 later on, or 50 and a 25, and just get the 75 that he's looking to achieve out of the way as quick as possible. But he's got to be thinking right now, certainly with the positive start that we've had to 2023, that something needs to be done to bring this in line. And that old adage of "don't fight the Fed," well, we are fighting it at the moment, and typically that's never a good thing. I don't know if I can bring it up. Let's have a look. Just bear with me. You've probably seen this before, if I can find it. So this is a table that was put together, I can't remember by who, of just how the market reacts once pivots have occurred. And actually the greater crash actually occurs once the pivot happens, once we move from that quantitative tightening to quantitative easing stage. That's when the uncertainty comes back in, and it's uncertainty that drives the markets, or the volatility in the markets, and that's when the uncertainty happens and leads to the crashes. So although everyone's screaming for the term pivot, even if we get that, we may likely see that that's going to lead to a further downside, and downside to stocks has a knock-on effect generally with crypto and vice versa. So that's kind of my thoughts on where that sits. I'm sure other people have got other thoughts as well on that one. See what we've got. Visions were better off and safer in BTC, really. Oh, that's going back to FET.ai. It is. It just if the reason I want to have a bit of exposure in AI projects is if that's the next thing in crypto, whenever it does wake up, and if Fetch can do what they say they're going to do, then it could easily surpass its previous all-time high. I mean, its all-time high was, when it had only been around a year and it didn't have a working ecosystem. If we can get that ecosystem going, there's no saying why it can't go more than 3x. And we know that altcoins do move, and if they are successful, people get behind it, then I think there's an opportunity there. So having a small amount of exposure potentially could be the right play. He then put, if BTC breaks and holds 25k, will you rethink about your DCAs? What's the emergency strategy to conclude the bottom is in? And so, we'll go into that actually pretty soon. So I will cover that in a second, if that's okay. Right, I'm just going to want to touch back on Chris's questions from back here. So where do we think we are in the cycle? Willy Woo and Plan B have suggested that they think that we're in the very early stages of the bull cycle, i.e. disbelief stage. So what we're talking about here, I'll zoom in so we can see it a bit clearer, is this. For those of you who aren't familiar with it, it's the Wall Street cheat sheet, the psychology of a market cycle. And so it starts off with, we're in a bear market, there's just disbelief because we've started to see a climb, but we've seen and experienced so many of these, it's like water for ducks back. So we don't believe it's going to happen. But then the climb doesn't stop. Suddenly that changes to hope. It keeps on going, optimism, then real belief that we're getting there, the thrill, euphoria, lead to a blow off top, comes back down, it recovers. We think it's all right, guys. It was just a pullback. We get complacent. We don't exit the market. It drops below the lows it made initially. We get anxiety, denial, panic, capitulation, anger, and then we go into depression, and then the cycle repeats back to disbelief. And if we get a Bitcoin chart up, let's just hide that for a second. I mean, even looking this one here, we had this climb up here and it fall back, disbelief. Come on, guys, this always happens, but it doesn't make it. Suddenly hope, then gets into that excitement, the belief stage, the take my money stage. And then we had, I'm calling this a blow off top. And I said this at the cuddle. So this blow off top here, it pulls back. And then what happened here is this dead cat bounce. I mean, these were both wicks that happened, on days, and it just so happened to just wick higher on that day than the other. So it did make a slightly better top here. So whether or not, it doesn't necessarily matter because the end result was the same, but this kind of blow off top second time, or complacency because we didn't sell, it pull backs again, it comes back up. It's all right, guys, this is where it now goes to 100k, and we fall away and we get through the anger, the anxiety, and all of that stage. And going back to what Chris had asked and what Willy Woo and Plan B are potentially suggesting is that we're actually climbing out here. So this disbelief stage is climbing out. So there's those that don't believe that the bull market's there, and there are others that are just eyes. Oh, why have I got the wrong sheet? Not that one. No. I don't know if I put it. Did I just close it by mistake? Oh no, here it is. And so so this disbelief, whether or not we're gonna break through. Where do I think we sit? To be honest, I think we are close to the bottom of this. So this is a hard place to chill, and it looks like it's a drawn out period. It doesn't necessarily need to be, but there is anger in the market at the moment. There might be anger that people have missed the bottom, and there might just be still anger just from the previous falling. I think there's definitely getting to the point where there's depression out there, both from the bulls and the bears. I think it's fairly new on the bears at the moment, but we can't deny the FOMO that's coming in. So, I think we're somewhere in and around here. At the moment, I'm still leaning to the thought process that we're going to certainly retest the low that we saw in December. I'll explain that a little bit later on, but that could be very short-lived, and I could be wrong, and actually we could be at the disbelief stage, climbing up into hope. And everything really is going to depend, going to back to Bijan's question, in my opinion, on one, how we close this candle today, because it's a monthly close, which we'll have a look at in a second, and two, how we interact with this 25k level, because the 25k level is pretty important, and I'll just put it on here. So ignore the fact that this is a potential death cross on the weekly, which we'll talk about. But what we've got here is we've got the 200 weekly moving average, which is currently sat at just under 25k. We've also got the 50 weekly average, which is currently sat at 25k. And then we've also got previous price action in and around that level there. So for me, this is an incredibly powerful level. If it breaks and holds that, then I will be getting more exposure into the market. And the reason I will is the next line of defense is 28 to 30k. Well, I might as well be part of whatever this is going to be, if that's the case, And we'll get them. But to get through all of these levels, that's going to be, some very bullish sentiment to manage to break through that. We're going to need a decent amount of volume coming into the market to break us through. But to break and hold above those, I think would be a very positive outcome. So to go back to Chris's question, I'm currently of the opinion that we're in this depression stage probably. And there are still people moaning about losing their funds. And, I've got a feeling that if this is just a bear market relief rally, that's going to lead to a lot more significant depression. Spit my words out. From the bulls that have come back, and you just have to look at crypto Twitter and YouTube now, and the bulls are on fire. They are loving the position they're currently finding themselves at the moment, and I worry. We have gone from the fear and greed index, which again I should have got up. But whilst we're doing it, we had gone from 2 weeks ago, lows of 26 to now above 60 in the space of 2 weeks. And we are well in the greed now. Okay, yesterday was 61. It had that pullback, so it's now down to 51. But yeah, last month, it was the month of January, we were in 26. So it's worrying how quickly that sentiment can shift. And it's great to enjoy that. And anyone that's been able to ride that up from low teens or mid-teens up to where we are now, fantastic. You're in a great opportunity if the market does turn around, still bag a bit of profit. It's why I've not fully jumped in at these levels, because why jump in at a key resistance point? I might as well wait to see, otherwise I might end up being a bit exposed. But the way the sentiment has shifted worries me that we could just be in for a bear trap. But sentiment might have shifted because we just have bullish news. There are people that are taking advantage of the price of Bitcoin. It's out at the moment, and we're going to go. And we look at fractal patterns all the time. Why can I never find this bloody chart? Okay. You look at, again, let's just get rid of this. You look at this capitulation leg down here, and then what we had a bit of ranging in and around the sort of the 3,000 level, bounce around, and then bang. It went up and it never looked back. I mean, it's oddly familiar. If you call this leg the capitulation leg, the final ranging, and then bang, 4 weeks, a monthly candle, you put that on the monthly, fantastic, that climb out there. So there's some similarities from the fractal patterns there. Yes, people are going to say that the macroeconomic financial position is different now, and I completely agree with that. And they're the things that are sort of, tempering my FOMO. But at some stage, I've got to decide that enough's enough, and I certainly won't be waiting for a call from Simon. I've got my own criteria, and once that hits, I'm going back in. And if I get back in at 25k, it never retests it, and off we go. I promise you, it felt the same for me before when I got into Bitcoin at 7k. It felt silly at the time because I missed 3,000. But it felt great when it's back up at 40 plus. This will be the same. Once we start surpassing those all-time highs in 2-3 years time, whatever it's going to be, keep that horizon long enough, you're not going to bother about that 3k opportunity you missed out on. And for those of you that are worried about altcoins, Bitcoin will move first. So if you move into Bitcoin and then use that Bitcoin to buy altcoins when they're suppressed using sort of the BTC dominance, etc., there'll be an opportunity for you to gain more dollar value by switching from BTC into whatever altcoin it is that you like, and then watching that ride up faster but later. So there's still an opportunity, even if we hit it now, to make money. So don't kick yourself if you're wanting to get back in. But for me, there's no point getting in this close to resistance, this close to some key events, whether they be news events or whether they be TA events. I might as well just wait now. I've already missed the 15k. So hopefully that answers Bijan's and Chris's. Simon seems pretty adamant that we go to 13k. At the moment, we haven't broken this. We are still forming a lower high, from this one here. What we want to see, and I went through this last week, is a rejection, forming that higher low, bounce back and break through. That would be the perfect scenario for that. And that might just be what we're doing now. Next K level we've got to look at is 20k. And there's other moving averages and price action that you can have a look at, but 20k is an important level again for us now. How do we act around that if we are rejected? And off we go. So, at the moment, there's nothing necessarily confirming to me that we are out of the downtrend. Yes, this is a great rally, and we went through last week about 35% increases that happened over the summer that still failed. So I'm going to stick to that at the moment, but I am ready to move if need be. You then asked, I've always wondered if someone has a lot of disposable cash, 50 plus, which they don't want to allocate all to business. Surely they would get bored of sitting in cash for a long time. They may not want to go into property stocks, so may start allocating some of the cryptos. As for most people, 20% profit plus in a year is not too bad. Yeah, I agree. I'm not sure that's a question or just a statement. Not always guaranteed 20% profit every year in crypto, so it's got to be selective. But yeah, people have disposable cash that they don't necessarily need access to quickly, then moving in and around these levels is a good level to move in at. So I agree with that. I read somewhere that 85% of all Bitcoin bought recently was by institutions, not retail. Excuse me, possible bullish news. Yep, I saw that article too, and that article is here. US institutions account for 85% of Bitcoin buying, in very positive sign. That was on the 27th of January. So Matrix Port, head of research and strategy, suggests that it was the industries that were buying at the moment. So institutional investors are not giving up on crypto. And as much as 85% of Bitcoin buying being in sort of American institutional players. Now, this goes back to institutional players. Who are the institutional players? Are they market makers? Are market makers moving this price? And I don't want to now descend into sort of, that kind of, is the price only moving, not because of TA, not because of news events, but because market makers are trying to change sentiment, to trap people in a certain sentiment, and then profit off the back of that. We spent a couple of weeks talking about that. There's definitely there, to me, this suggests that might also lead to that, 85% of institutional players are buying that. Well, maybe it's them and their spare cash that's doing that. But what is clear is that it's not retail. And again, we went over it last week, but it's not been a lot of volume. But although the price has been continuing, we had a spike of volume at the beginning of the year, but the last 3 weeks, the volume has been tailing off each week, yet prices have continued to rise. So it's definitely a divergence of some sort there. But yeah, I agree. Something to look at. It could well be bullish, I'm sorry if I'm sitting on the fence here, but just by initially reading that article, 85% has been bought by institutions because they know the price is low. They want to get in, and they've got a longer term horizon than perhaps retail have. Yes, that means that actually they're creating a pretty good floor in and around 15 to 19k. So we'll have to wait and see. Right. What am I looking at the moment? So we haven't had this chart in a while, but it's an Avenger call that actually has a monthly candle close the day it happens. And the level that we're really looking at now, how does it close here? This one closed and opened at 23,300. So in the next 2 hours, Can we close below that? If we do, I mean, look, we're splitting hairs here and it's not zoomed in far enough, but in theory, the monthly close has not created a higher low. So there's some argument there that's what we're looking at. So right now, that's the level that I think the bears need to be defending, 23,300. And the last few hours they've certainly managed to ward that off. But anything can happen in Bitcoin. So again, we just need to wait and see how that closes. But that's the level I'm looking at. And now the new level, really, will be down at 16.5 as well down here. We could draw another line there. It's this. I think Simon has like 16 to 13 or 16 to 12k, kind of like a couple of levels that he's at. So yeah. This one. Don't worry about that. I'm not sure where I was going. So what was interesting, this is High Block Capital. This is a liquidation heat map, which you've seen me use before. It's very akin to Simon and his Kingfisher.io, I think he used. And all I wanted to just show you, and I'm not necessarily worried about where the price is at the moment, but remember the greener and yellower these lines get is the level or the dollar amount value of liquidation levels that are set in and around there. And you can just see price, bearing in mind that, if price was just here, there's nothing to the right. Some price is going, it's taking out these levels. It's taken out this fairly significant level here. It's taken out all of this liquidation. So, it's around about 3.5 billion. So that's what, 3.5 plus 3.5, 7. Then another 3. It's $15 billion worth of liquidations that's gone and taken out there. And then what's it done? There's not much more. So it decides to reverse it. Because you know what? Market's it's around about 24k. Bull market's back on. Everyone start placing longs. And suddenly these these long liquidations start to fill in. Well, you can just track that the price just suddenly comes and just takes those out, spikes back down. Now, what's interesting is it's a hell of a lot of long liquidations in and around here. Now, that to me looks fairly appetizing for any market maker. No guarantee it's going to go to that, and no guarantee that's its next move. But I'm just saying, looking at things like this may give you an indication of key levels in both directions that you want to have a look at. And right now, I mean, this was about an hour old. I could refresh it, but there's some around about the 24k short liquidations. Final ones really, probably the dregs from 15k short in it. But this is just picking up here, and we're talking, what we got. So that's what, 8, it's 12.5, 16, 17, 20 odd billion. And just sort of building up down between 22 and 22.5k. So FOMC tomorrow is a highly volatile day. You can bet your bottom dollar that market makers may just look to whipsaw it up and down into those two levels. So mark on your charts, just put a little box sort of anywhere between 22,100 and 22,500, and maybe a little line at 24,000, and just see. Don't act necessarily on it, but just have that information. Just see if you see any candles quickly heading down in those directions. And it might give you a feel and a flavor for perhaps larger forces at work just trying to cash in and cash out on these areas. Now, just to be clear, these are just liquidation levels that are taken on the order book from Binance. There doesn't account for people having stop losses or anything else. So stops may happen, and then these liquidation levels get taken off the board. Of course they do. This is just an aid memoir or a guide for certain areas and targets. So just that slight caveat there. Right, we had a look at that. I've seen this being talked about now. I know Simon's not a fan of the death cross. A lot of previous death cross and golden crosses have played out. On the weekly chart, we have a golden death cross. It's got golden death cross. Golden death cross? A death cross. Which is right around the 25k level. It's never happened before on Bitcoin because Bitcoin's not old enough for this to have occurred. So it will be interesting to see how the market and price reacts to that. However, I think at the same time, let's go back. So on the weekly chart, so this is a software that effectively forecasts where it's going to go based on current price action. So it's saying Monday the 6th of February. During that week, the cross is going to happen. That's on the weekly, and it's a death cross. You go onto the daily, and on Monday the 6th or Tuesday the 7th, we have got a golden cross that's going to occur. So we've got two opposing pieces of TA that are going to happen on exactly the same day. That's currently where price stands. Which one's going to win? I don't know. You know, higher time frame, I would usually say has more weight to it, but maybe they just cancel each other out and price gets on. Maybe this is just something to look at. But this little software and this little package, it's just interesting to have a look at. I've seen people talk about this battle between the two, the daily and the weekly golden and death crosses. So again, you know, perhaps just 6th of February, 7th of February, back to the next Avenger call, we may be able to talk about what's happened to it. It may not immediately happen, but yeah, again, an interesting event that's on the horizon. In terms of macro price action, I don't really have too much to say. One, because I've no idea with the volatility that's going to happen tomorrow of where things are going. But just looking at what we put on last week, it has respected that, but I think we got rid of this last week. Maybe it didn't save. And if we do, let's do it from down here to here. It did kind of reset there. Maybe I kept it because it was fine. I mean, it's certainly 22.4 has been hit a few times. It's not quite got up to 24,400, so maybe not. And because it's an extension, I haven't even bothered putting any furthers on there. Okay, maybe not really anything necessarily to look at the moment there. It's just, as I said at the beginning, you know, okay, whipsawed up and whipsawed back down. I mean, that is a bearish engulfing candle, which generally signifies a reversal. Maybe that's what it is. We'll have to wait and see. But it has just been ranging between 23,300, as I'd said, to about 22,500, 22,600. Still stand by that. Ethereum, again, okay, this one's a little bit better in terms of, but it's struggled to get past the FTX level. But looking at the levels that we had identified it had come back to, it's really hitting this one at the moment. And then these other boxes, if it does fall, again, you've seen me do these before, but at 0.5 at around about 1,400 and then 1,350 would be the two areas I'd be looking to catch if either of those don't hold. Got, again, so from bottom to top, I mean, it's played that one quite nicely. It's just working in and around here. I just don't have too much to say within it. We're just in the ranging pattern, and we have been for, you know, some 10 days now. So I'm just waiting for some actual movement, and it can sort of take the price, sort of take the decision of where the price is going to go. So I'm not sure if anyone had any particular ones they wanted me to have a look at. I'll just continue to have a look at a few of these other ones. ADA has been on a fairly decent rip, seems to have bounced off that, and then it's just finding a bit of trouble at the moment, just under 40 cents. But and that's not necessarily surprising. Oops, thought I had that. We just look left, and there's a bit of price action in and around there, so maybe that's not so much of a surprise. As a matter of fact, I mean, you can see it picks up those two wicks from the drops over the summer and May as well. But if it's going to lose here, maybe it's going to look to re-attack and bounce back up off the 35 level. Again, there's a box down here where I'm wanting to look to buy in, so I'm way off that at the moment. And I might just need to reevaluate that. If I think it's only going to retest loads, maybe I do need to have a look at $24 as just start sort of averaging back in. Binance, it's probably going to be a fairly similar story. Let's take it to that level there where it pulls back, kind of bounces back off that, wicked up, rejected. There's definitely something in and around there. I mean, one with Binance is it's had so much FUD recently. Well, it's had so much FUD, but it's actually withheld it all. And I didn't put it in here, but there's an article that, you know, there were billions of assets that were taken off Binance at the latter part of last year. I think it's something like $16 billion worth of assets have now been brought back onto the exchange. So that FUD seems to have worn off quite well. So yeah, I have a bit of money now back on Binance and KuCoin and a few others. Not a lot, but, you know, I mentioned last week, I've been looking at levels to try and buy back in. And just with this AI thing, I've just been moving stuff across that if I want to buy, I will do. Not large amounts in case the worst happens. Majority is still on my Trezor, but that's where that one is. Litecoin. Again, I didn't cover it in the news today, but Litecoin's being partnered with MasterCard. So, you know, again, some real world utility within that. But we've been looking at Litecoin just because of its prior movements for its halvening rather than BTC's. And again, that rip seems to have occurred. I mean, BTC's done the same, and I've not really had a look at the percentage difference. But go on, let's have a look. So let's do it from wick to wick. So it did a 60%. What did BTC achieve? Well, this is the time frame, same time frame. Only a mere 47. So yeah, I mean, BTC's done nearly 50% at the start of the year, which is unbelievable, really. Nobody would have expected that coming into Christmas, and well played for anybody that properly dollar cost averaging back in the low teens. I think you've had an absolute blinder there. So well done to all. I think that's kind of it for me, guys. Hour and 40, so not as long as last week, thank God. But you know, there is a bit of a delay, so I'll hold off a little bit and just see if there is any questions or comments in the chat. Anything you want me to have a look at? Otherwise, we'll call it there. But I'd really would appreciate some feedback on how this one's gone and how you prefer it, and especially those that watch it back on the replay. Just how that feels for you in terms of just being able to transition through everything, being able to see me. Look at Tesla. Okay, Tesla. Jamie, I will do. Okay. I mean, so today, last couple of days have been pretty interesting, really. So we had the earnings report that came out, which was last week. Big positive uplift from that. Some fairly decent results in terms of the earning. Probably only natural that we had that pullback, given that we had a jump of, at the time, 24%. But yeah, it's gone down. I mean, in terms of, you know, sort of fib levels, it's just hard to gauge. There's some of the, just trying to see where to place it from. I mean, the best we can really do at the moment is where it turned around here, but no necessary guarantee. I mean, the first level that kind of screams out to me is, you know, 160, which is kind of looks like it's almost bounced off. You know, if I'd done it to the wicks, it might look a little bit different. But the other thing is this gap, you know, around about 150. Will that now look to effectively be filled? But in terms, because this is kind of a V-shaped reversal, I mean, almost there. So in terms of trying to find some solid levels, you just using the fibs, it's kind of hard. There's not that much previous price history. It's come in and bounced back out. So yeah, it's, if we have a look at some of it, try and throw a few other things on, see if there's anything else that springs to mind. I mean, yeah, this could just be another failed rally. We can't ignore the fact that it hasn't cleared that level there yet, which is what it's going to be, just under 200. So there's a bit of a way to go to do that, but you want it to clear that, pull back, form that lower high, sorry, that higher low, and then start building the sustained rally up from there. Mini double top forming there, but that could also form a shoulder for an inverted head and shoulders, and we could see a moon time, but you know, that could be months off. So yeah, we just have to wait and see. Sorry, Jamie, that's about as good as it can get. I know you've from last week, you've done quite well in sort of positioning into Tesla. So it's more a case, I suppose, is it a long-term hold? You keep a majority of your assets available within there. You're just taking a little bit of profit and now looking for a good pullback for some re-entry. And if that's the case and you're willing to wait, you know, that hole there might be the first target. As I say, lining up with the 382, 316. I'll just draw it again. Sorry. You sold all your position, or was it just a partial position? 382. But yeah, okay, it's pulled back. But again, you know, we've got earnings reports tonight. We're not even spoken about. You know, we've got Amazon, we've got Google. I think a lot of them might actually be positive. Whether that's just fudging the books because most of them have laid people off they don't have to pay for, and so they can quickly just adjust that on their balance sheets and profit and loss accounts, whatever. I don't know, but yeah, they may actually turn positive, and we won't know that. Actually, it might have just come out. It's going to see market close is when they come out. So it'll be tomorrow, and so you might have a look at sort of what the pre-trading things for the things like the Nasdaq and then Tesla are. But if they do come out as positive and they're interpreted positively, then we might have a case where we see a bit more of a rally. And then looking at the Nasdaq, I mean, this one has cleared that noise in and around November, December. So for me, it's probably 12,400. I suppose it's still got to make another attempt over 12,100, but 12,400, just trying to sort of get past this sort of range in and around to the right. But yeah, they are linked that way. Hopefully that helps for you there, Jamie. Does anyone have anything else? I'm sort of holding off because I know there's a delay. Okay, well, perfect, guys. Appreciate you tuning in, especially with the new format. If I ever get a decent answer from Zoom, maybe we'll relook at that. But yeah, hopefully it works. Hopefully we can get that a bit more swept up and get some voice channels in here as well to allow people the opportunity to engage vocally. Thanks again. Have a great week. Have a great weekend. I'll be watching live what happens tomorrow, so I'll update everybody in Discord if you're not paying attention yourself. But yeah, if you are planning on trade it, just be careful. It's normally a very volatile day, and perhaps have a look at just put in those areas where the liquidity was, 22,100 to 22,500 and around about 24k. We'll see if we get any fireworks in and around those levels. Have a great time, have a great evening, and thanks again. Cheers now.